They said they were gonna do it. They actually did it. Interest rates just went up again the other day. Let me spend a few minutes with you here, helping you unpack how you can still thrive as a real estate investor here. Let's jump right into it. What's up YouTube? It's Corey McKinnon here, and today we're going to be talking about all things mortgage rates here in Canada. So thank you so much for tuning in. Make sure you hit that, don't just hit it actually, make sure you absolutely smash the subscribe button. Go hit the like button, drop us a comment, let us know what you like about the video here. There's going to be certain points where I'm actually going to be looking for your feedback. So in case you missed it, a few days ago, the Bank of Canada raised interest rates by another full 50 basis points, which brings us up to 3.7%. when it's a prime rate here, and the overnight rate is 1.5%. They're even calling for the overnight rate to go as far as 2 to 2.5% by the end of the year. We'll see what happens, all right? But the Bank of Canada has definitely been following through on what they've been saying that they're gonna be doing, so it should really be no surprise, right? They said that they were gonna be doing this all the way along, and guess what? It actually happened. So no surprises there. There is another opportunity for them to raise interest again in July. So drop a comment down below and let me know what you think they're gonna do. Are they gonna raise it by 25 basis points? Like, are they actually gonna be a little bit nice to us for once? Imagine that. Is it gonna be the 50 that they're saying that they're gonna do? Or are they gonna go for an absolute world record interest rate hike of like 75 basis points or even a full interest rate percent? Who knows, right? Anything's possible. Nothing is rational these days, it seems, during these COVID times. So what does this mean? What have we been seeing as real estate investors or even first-time home buyers? Well, a lot of inventory has been hitting the market, like literally double and triple in some markets, inventory just flooding the market. So now, what is that gonna cause? Interest rates are going up, a lot more supply. Things are sitting, right? Things are sitting, things are stale. Real estate agents are not doing offer dates as often as possible. Now, there still are some places where people are getting multiple offers and they're still doing offer dates. Really, it's just to give people a little bit of a deadline and say, hey, please give us your offer by this date. We could actually use some offers these days. So what does this mean as real estate investors or first-time home buyers? Because we're talking about a lot of negative things here, right? So this is gonna affect your ability to cash flow. This is gonna affect your ability to refinance quicker, because a lot of the banks are actually gonna be pulling out some of these conditions that they never used to pull out and say, well, actually, you've only owned that property for 8 months, and we want you to own it for 12 months before you can refinance it, all right? So it is gonna slow you down. You'll actually look like less of a genius just because you bought real estate here in the past couple of years. Imagine that. You might need to actually level up your skills or your fundamentals of real estate investing if you want to continue to thrive. And that's why you're watching these videos here anyway. So please stay tuned. But let's talk about some of the positives here as well. So the positives about all this situation of what's going on is that there is more inventory in the market. You can be a lot more selective when it comes to what you're buying on the market, all right? Super, super important. You don't have to go buy a total piece of junk just because there's nothing out there and everybody's fighting for it, and you have to go throw these Hail Mary offers, sight unseen, no conditions. You know, it just doesn't make sense. It didn't make sense. You know, that really was peak real estate. What we were seeing in January, February, and even parts of March, I don't believe we're going back there for quite some time. We will get back up there someday as just rates continue to climb again, but you know, times have changed. So there's a lot more inventory in the market, things are sitting, you can be a lot more selective, and you can actually put a condition in on your offers. Imagine that. A real estate investor who could actually have a condition on a property they want to buy. It's amazing, hallelujah. Thank you for allowing conditions again. Yes, it is actually a thing. You can put a condition on a property. Now, when it comes to what the banks are doing here, I just finished a live for the past hour before I filmed this video with the Finlay Mortgage Group, helping the Canadian Real Estate Channel do a takeover. You know, they had a lot of great insight, and I wanted to share some of that forward to you here as real estate investors as well, in case you missed the live. So, you know, banks are being a lot less risk adverse, right? Because they're gonna be stress testing you more. They're gonna be making sure that they're throwing everything in the kitchen sink at you before they allow you to actually, you know, get financing on this property. Because if the bank has to actually foreclose on it, they wanna make sure that, you know, they're not in the business of buying houses. They're in the business of lending money. So they wanna make sure that everything lines up before they lend you that money. And some institutions are just really tightening up. They frankly don't wanna lend. There are some major banks here in Canada that don't really like real estate investors, and they definitely don't like them these days either. So don't be surprised if they say, hey, we actually don't like the city that you're investing in, or call us back in Q4 when we actually might be lending a little bit more. Again, I've heard that from some credit unions here in certain cities, so don't be surprised. They're also saying that your rate hold may not be applicable if you have like a 60 or 90-day close, especially on a multifamily building where that's more commercial rates. You may need to go and get your rate changed a few times leading up to closing because they can't guarantee it when things are fluctuating so much, so don't be surprised. And the whole appraisal market has gone bananas. So I definitely don't envy being an appraiser these days. You know, things are rapidly changing in the value market of what real estate is worth. So they won't let you use comps, I hear, if they're older than 30 days. They want really accurate comps because again, Jan, February, March, all that stuff's thrown out the window. That's peak real estate. Doesn't really matter anymore. Those were all unicorns. So we got to take those off the table and we got to be looking for comps that are only 30 days old. Now, luckily, as we go further along here, you know, another month or two, that your comps will be able to go back a little bit further, which is great. But those are just some of the things that we're seeing in the lending market. Commercial, some people are going after more commercial products now too. If they're into multiplexes or anything over 4, there are some lenders out there that'll kind of consider anything that you buy, like credit unions will consider you in a commercial program as well. So commercial mortgage applications are going up. A lot of people are refinancing. They're still trying to get that money out of their homes while there still is some value there. If they didn't do it in the past couple of years, they're doing it now. So they're just getting overwhelmed again. So please be kind to your mortgage brokers. Drop a like and a comment below if you are a mortgage broker. All right, so what does all this mean for you if you want to decipher this as a real estate investor? What should you do? Well, I've got 3 tips for you here that I'm going to talk about right now. So the first one is that you really need to make sure that you know your numbers and be patient. All right, so it's so important to practice patience. I've seen people that weren't patient, they're way too aggressive, they either bought way too high, their money was way too expensive, and it's really smashed them on the head. So practice patience. It is an investor philosophy, believe it or not, practicing patience. But you can't just be so patient that you're just sitting on the sideline either. There will be lots of opportunities with all this inventory coming on the market, motivated sellers, they're willing to work with you, maybe they're even willing to be more creative with you. So make sure that your numbers make sense, make sure that you're being patient. Number 2, make sure that you're using higher yielding strategies. This isn't the first time I've talked about this. You've probably seen this trend on my channel for a few other episodes as we highlight Airbnb owners or my furnished rentals or whatever it might be, turning a regular rental into a furnished rental. So I've always had some of that in my portfolio. I recommend that you do as well, because now the total cost of ownership of properties is going to be going up, all right? So yes, interest rates are going up. Houses haven't come down, or the home prices haven't come down to the point where you're still even keel. The total cost of ownership of a property is probably going to rise up a little bit here. So make sure you're going for those higher yielding strategies, like, you know, getting in the hospitality business, short-term rentals, you know, even vacation rentals. But just make sure that if you're buying a vacation rental, hopefully they'll go down a little bit this year, just with extra supply and people wanting to sell while the going's good still, but you won't be getting some of the rent numbers that you were from a few years ago, okay? Like, again, that was craziness. People couldn't travel as easily, so of course they were paying more for a typical week in a cottage or whatever it might be. So make sure that you're doing your numbers based on like 2018 and 2019 cottage number type vacation rental numbers. My final tip for you is to always be moving with speed. It's so important. The real estate game is not a game for snails and turtles to go and thrive during most situations, all right? You need to make sure that you can close quickly. You can tie things up quickly. If you're gonna do a renovation, or if you wanna go for a refi, or if you're trying to flip something right now, you gotta make sure that you're getting your cost of goods really, really economically, and you can get it back on the market and make sure it's really wowing people and you're in great neighborhoods. But still, buy quickly, make sure that you're getting your mortgage rates quickly, get in and out of that refi, pull that money out, whatever you can these days, and put it back to work in another asset, okay? So again, friends, that's what I wanted to share with you here today. I do recommend that you don't just sit on the sidelines and do nothing. You will regret it later. You will see properties on the market that you wish you bought, you wish you actually took a swing at. Go put some offers out there. There's gonna be people that want offers, and they're gonna be sitting there with crickets, and someone's gonna come along, a more experienced investor, and throw out a bunch of offers and tie them up and then take down the ones that they want, that they see the opportunity in, they see that they can go get higher yielding cash flow on it. So don't be a statistic, okay? Keep investing in real estate. Until next time, my friends, be amazing. These rates are still lower than they were before the pandemic, and they're still lower than they were in the past 15 years. So be blessed, and we'll see you on the next one.